Let's get to our final trader talk of the day. Chris Robinson, Senior Risk Manager and Trader for Top Third Ag Marketing is here. Chris, what's your outlook on the grains market?
Right now, if you're looking for volatility, you really don't need to look any further than the action that we've had in the corn, wheat, and soybeans. We're heading into the time of the year where there's uncertainty as to whether or not we're going to get a weather issue, be that a drought, too much, not enough rain, or too much rain, some sort of issue where that would damage crop yields. Damaged crop yields would lead to less supply. Less supply equates to higher prices. The second thing that people are looking at is if we do get a deal with China. China takes 75% of our soybean crop. That's who buys most of our soybeans. If we were to cut a deal with China, as severe a sell-off as we just watched, we launched this $2, you could have a severe correction higher. So that type of setup for the summer is something I'd be looking at. The type of trade you look for, that type of thing, would be a good risk-reward trade where you're buying out of the money calls or out of the money puts, where you know beginning from day one what your risk is. You buy that put, you buy that call. The surprise move would be if we got a weather issue or if we got a deal with China, which would, again, pull back that demand and we'd be right back where we were a month ago.
Before you take off, what's your forecast for the stock market?
Started the year off at record highs. Market had a pretty good correction in February, about 3,000 points in the Dow. That equated to about 10, 12%. Since then, we've been trading in about a 2,000 point trading range. So I would say moving forward, I would wait for a breakout, either a breakout to new highs or a breakout below those February lows. And if we do get a movement above or below there, you would probably see money flow come in and try and extend that move. So again, how do you play that? Well, you look for opportunities to get long the market if it takes out those old highs, and you look for opportunities to get short the market if we start to take out the February lows, looking forward for the summertime. Typically in the summertime, we have very thin, choppy markets because everybody goes on vacation, but there's always the possibility of a big move. And I think the best way you play that is by looking for opportunities, again, at the extremes. Look at the highs and look at the lows, kind of set your trades off those.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.